Hey YouTube, this is Eddie's Tech Talk, and I'm going to take the channel sometimes in a little bit of a different direction. Here's what that is all about. I'm going to take the channel and talk a little bit more about personal finance products, namely credit cards. I'm not going to get into crypto and all this other stuff, and I'm not going to give you financial advice while saying not financial advice like all these other YouTubers. I am just fascinated by credit, and especially credit cards, because what I realized a number of years ago, if you use your credit card like you would cash, right? Let's say you use a debit card or you use cash for things right now. Just use a credit card in place of that. Buy the things you would normally buy, pay your utility bills, gas, groceries, right? Things you were already going to buy, things you were already purchasing, and you move that spend from your cash, from your debit card to a credit card. There's a lot of benefits to that, and I'll get into some of them. But you can build your credit score. So if you want to get a mortgage for a home or an auto loan, in my opinion, those are some of the only debts to really incur. But if you're looking for those lines of credit in the future, and you have years and years of good spend on a credit card where you pay it off every single month, never carry a balance, it increases your credit score. It increases your credit worthiness to lenders. And that's never a bad thing. And also with credit cards, and this is the kicker, right? This is the big thing. Just shift that spend that you would normally do to a credit card from your debit card or cash, and you get free money. Yeah, I mean, what kind of deal? What exists out there in the marketplace today where you use the product? It doesn't cost you anything unless it has an annual fee, but we'll talk about those. But you use this credit card in place of cash. You buy all the things you would buy anyway. You're not incurring more expense, but you get money back. You get free money. And so that's what has fascinated me about credit cards. And people have asked me, what's the best credit card for me to get? All this kind of stuff. So I thought that I would make a video here about all of those things, several videos. And that's where I'm going to really go with the channel now, and I'm not reviewing phones, tablets, computers. So come along for the ride, guys, and hopefully this will be a good one. And I'll begin it here just by talking a little bit about what is credit. So what is credit? Why does it matter? And how can credit card companies give you money for free for making transactions, purchases that you're already making with cash with a debit card? How can credit card companies give you money? Well, credit at its core is just money now with a promise to pay it back later. And this most commonly manifests itself in a mortgage. So let's say you want to buy a house. You don't have all the money on hand to buy that house. So you go to the bank and say, look, I have $20,000, but this house is $120,000. So I need to borrow $100,000 from you to buy this house. And the bank, after vetting you out, your income, etc., they'll say, sure, we'll loan you that money. We'll be out that money in the short term, but you have to pay us back plus a little bit extra to make it worth our while to loan you this money in the short term. And so, of course, if everything is good to go, then the person gets the loan, buys the house, and the way that the bank makes money off of that, there's some fees, some closing fees, blah, 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 but it's mostly through the interest rate that you pay over time. And so theoretically, that works out well for everyone. The bank loans the money and gets that money back plus extra over time, and it's very passive for them. They don't have to do much. And then it's worthwhile for the borrower as well because they have a house. They have a place to live. Hopefully that house appreciates and all those kinds of things. So that is how, that piece of credit works. But what I'll talk about primarily here on this channel is credit cards. And they make money a little bit different. It's still the same premise, money now with a promise to pay back later, and the advice on this channel is to always pay your credit card bill in full every month, because part of the way that credit card companies do make money is through people not paying their card off in full every month and then having to pay interest on it later, and it's a very high rate. So that's part of it. Never do that. Never carry a balance. So if you use your card, say you put $1,000 on it, and you pay it off at the end of the month when you get your credit card bill, you only pay $1,000. You pay no interest, never any interest if you pay your bill on time, but they still give you points, they still give you miles, they still give you rewards. Now, how would they do that? They're not making money off that interest off of you. Well, they are making money off the interest of other people, unfortunately, but the way that credit card companies primarily work is they're actually competing for your swipe at the terminal. So if you go to the store and you have one credit card that gives you 1% back at, let's say, home improvement stores, well, you're not going to swipe that card if you have another card, let's say, that gets you 2% or 3% on home improvement stores, because they're going to give you 3% back. So that's more money back in your pocket. So why would I use my 1% card when I could use my 3% card? And then you swipe that card, you get that money back. And so what this does is, it's, again, this money now, a promise to repay later. So you're going to pay them that money at the end of the month, no problem. But in the meantime, the bank or the issuer of that card, when that card is swiped, they'll charge you, the home improvement merchant, your Home Depot, your Lowe's, a certain fee for accepting their card. Depending on what card it is, depending on the issuer, they'll charge a different rate. So let's say you have that 3% card, and let's say that they charge 4%, and this is just an example, I don't think it's usually this high, but let's say they charge the merchant 4% to accept their card. So Home Depot pays the issuer 4% of whatever you bought, that 4% of $20, let's say, and then they pass those savings on to you. They say, hey, we'll give you 3% because you used our card, and that's what we told you was the redemption for this category, and then they pocket 1%. So that's how it works a lot of the time. They call it an interchange fee. So that is a way that banks make money as well. So they're trying to compete for your swipe, because every single time you swipe their card, perform a transaction, whatever, they get a cut of whatever it is you bought. And so there's other ways that credit cards work, but to me, this is kind of a simplistic way of understanding it. It can sound like a scam, right? You're not paying any interest. You're substituting your debit card or cash for a credit card, and you're getting free money for the same purchases where you otherwise had none, right? It sounds weird, but that's how it works. Some people pay very high interest rates because they can't pay their bill in full every month. Never do that. So that funds a little bit of the rewards. But then, the rewards are also funded via interchange fee, which I just mentioned. And then sometimes with things like co-branded cards, which is like, let's say, the Marriott American Express card, or the Delta American Express card, or United, right? Or the Lowe's credit card, right? Co-branded, two different brands. A lot of times card issuers will buy these miles, these points at a discount. So let's say I go to the Marriott site right now and I can buy 1,000 points. I don't know the real value off the top of my head, but let's say I can buy 1,000 points for $10. Well, I can buy that as a consumer, but let's say American Express, they can buy those same 1,000 points. Let's say they can buy it for $4. So they can buy it at such a discount that when I use the card and they give me some points, oh wow, that's a good redemption for me. I'm getting points at a rate that I couldn't get anywhere else. But for American Express, they bought those points so cheap. So that's another way that credit card companies make money, issue points, sweeten the pot sort of deal. So that's kind of what credit is, how credit cards work here in the modern day primarily. This wasn't an in-depth analysis, but hopefully this can help you understand what credit cards are, how they work, always pay that balance in full every month, and all that kind of fun stuff, all right? And then you get free money back. So what credit cards are good? What credit cards are great? What credit cards should you get? Look, I'm not going to issue financial advice here. I don't know your financial picture. I don't know your situation. I don't know any of that. But what I will do here is go over cards, go over their benefits, their features, their points, and then you can decide for yourself if, hey, do I really want this travel card that has a lot of travel perks because I travel all the time? Sure, maybe you do, but maybe you don't travel that much and you don't want that travel card. You want a cashback card, right? So I'll lay out the benefits, the features, really carry out the credit card reviews much like I have my phone reviews all these years, and you can make a decision for yourself. This is Eddie's Tech Talk. Let me know what you guys think in the comment section down below, and I'll see you in the next one.